to steal $65 billion and go undetected for 40 years. Bernie Madoff's fraud. Bernie Madoff, a well-known Wall Street investment advisor, rose to prominence for running what was possibly the largest Ponzi scheme in history. Madoff's Ponzi scheme was run through the wealth management division of his company. When the FBI and the SEC finally uncovered the massive fraud in 2008, it was estimated that Madoff's investors had lost more than $50 billion over the course of nearly 20 years. Federal agents believe the fraud in the investment management and advisory divisions began in the 1970s. Madoff, on the other hand, stated that his fraudulent activities began in the 1990s. So, who was genius Bernie Madoff, and how did he steal $65 billion and go undetected for 40 years? Madoff was born in New York City on April 29, 1938, to Sylvia and Ralph Madoff, a plumber and stockbroker. His parents were Jewish. Madoff's grandparents were Polish, Romanian, and Austrian immigrants. He was best known for a financial swindling scheme in which early investors were repaid with money obtained from later investors rather than actual investment income. It was a fantastic and terrifyingly simple Ponzi scheme. Madoff enticed investors by promising exorbitant returns on their investments. When investors handed over their funds, Madoff simply deposited them into his personal Chase Manhattan bank account. He paid returns to previous investors with money obtained from subsequent investors. Clients' trading systems, which purported to show their alleged profits, were complete fabrications. Madoff grew up in Queens, in the predominantly Jewish neighborhood of Laurelton. He earned a bachelor's degree in political science from Hofstra University in Hempstead, New York, after spending his freshman year at the University of Alabama. He briefly studied law at Brooklyn Law School before co-founding Bernie Madoff Investment Securities with his wife in 1960. Ruth worked on Wall Street after graduating from Queens College City University of New York with a degree in psychology. Bernie Madoff began his Wall Street career as a penny stock trader in the early 1960s. He eventually established Bernie Madoff Investment Securities LLC, which grew to become one of the largest penny stock brokerage and wealth management firms. Madoff was a true entrepreneur. The computer trading software program he and his brother Peter developed was eventually adopted by the Nasdaq Trading Exchange and laid the groundwork for many of the electronic trading systems that are now commonplace. By the 1990s, Madoff's brokerage firm was processing 10 to 15% of all trading offers for the New York Stock Exchange, NYSE. Madoff was also known as a philanthropist to several charitable organizations and a major contributor to the Democratic Party candidates in the United States. Madoff formed close friendships with wealthy, influential businessmen in New York City and Palm Beach, Florida, then signed them up as investors, paid them handsome returns, and he used their positive recommendations to attract more. He also enhanced his reputation by establishing contacts with financial regulators. He used an air of exclusivity to attract serious wealthy investors. Not everyone was accepted into his funds, and being admitted as a Madoff investor became a badge of honor. According to investigators, Madoff's pyramid or Ponzi scheme began in the early 1980s. As more investors joined, their funds were used to pay out existing investors as well as Madoff's firm and, allegedly, his family and friends. Some skeptics concluded that his promised investment returns of 10% annually in both up and down markets were untrustworthy, and they wondered why the firm's auditor was a small storefront operation with few employees. Barron's Financial Magazine published an article in 2001 casting doubt on Madoff's integrity, and financial analyst Harry Markopolos repeatedly presented evidence to the Securities and Exchange Commission, SEC, including a detailed investigation, "The world's largest hedge fund is a fraud," in 2005. Despite this, the SEC did not take any action against Madoff. Large accounting firms such as PricewaterhouseCoopers, KPMG, and BDO, Seidman reported no signs of irregularities in their financial reviews, and JP Morgan Chase Bank ignored possible signs of money laundering activities in Madoff's multi-million-dollar Chase bank account. The Chase account was used to transfer funds to Madoff Security International Limited, a London-based firm that some claim existed solely to give the appearance of investing in British and other European securities. Because Madoff's firm was allowed to book its own trades as a broker-dealer, no one knew the alleged trades were not taking place. Employees of Madoff were allegedly instructed to create false trading records and bogus monthly investor statements. Madoff was a master marketer who built a reputation as a wealth manager for affluent clients in the 1970s and 1980s. Investors who gained access, typically through word-of-mouth referral, believed they had entered the inner circle of a money-making genius, and some were hesitant to withdraw their money from his fund for fear of not being able to re-enter. Even as Madoff's operation accepted money from various countries via feeder funds in later years, he continued to market it as an exclusive opportunity. Despite his reported financial success and personal wealth, people who met him in person were impressed by his apparent humility. For decades, Madoff's investors received consistent and steady annual returns through elaborate, fabricated account statements and other documentation that was provided to investors to persuade them that their money had been invested properly. The investments appeared to be legitimate, particularly to those receiving payments. Madoff's unusually annual returns of around 10% were a key factor in the fraud's persistence. Ponzi schemes typically pay 20% or higher returns and collapse quickly. Even at the end of November 2008, amid a general market collapse, the same fund reported a 5.6 gain, while the S&P 500 stock index had a negative 38% year-to-date total return. The returns were just amazing, and we trusted this guy for decades. If you wanted to take money out, you always got to check in a few days, an unnamed investor said. That's why we're all taken aback. In reality, however, there were no actual investments or returns. Madoff paid returns to the initial investors with funds provided by a steady stream of new investors. The scheme's longevity was largely due to feeder funds, management funds that pooled money from other unsuspecting investors, poured the pooled investments into Madoff securities for management, and thus earned millions of dollars in fees. Individual investors were frequently unaware that their money had been entrusted to Madoff. As the global economy began to deteriorate in 2008, a large number of Madoff investors needed money and began asking to cash out their investments. That's when Madoff's Ponzi scheme burst open. He didn't have enough money to cover his investors' requests, and new investor money was scarce. What people might not be aware of is that Bernie Madoff was apprehended for being turned into the FBI by his sons Mark and Andrew. Both sons worked for the legitimate arm of their father's business, which was 2 floors above the investment firm. Bernie confessed his deception to Mark and Andrew and his wife Ruth when the financial market took a turn for the worse during the Great Recession. The Madoff brothers promptly surrendered their father to authorities, and he was arrested the following day. Following this, Madoff's operations collapsed in December 2008 amid the global economic crisis. The feeder funds failed, and international banks such as Banco Santander in Spain, BNP Paribas in France, and HSBC in the United Kingdom reported losses, often as a result of large loans made to investors who were wiped out and unable to repay the debt. Many of the foundations and charities discovered that some or all of their endowments had been wiped out in Bernie Madoff's Ponzi scheme and were reeling from the scandal's fallout. Some foundations, such as the $1 billion Picower Foundation, the $240 million Betty and Norman F. Levy Foundation, and the $198 million Chase Family Foundation, lost everything and were forced to close their doors within days of Madoff's arrest. Those that did survive were forced to lay off employees, cut grant-making budgets, and scramble for new donors to help replenish what had been lost. Even charities that escaped relatively unscathed were indirectly harmed when Madoff's scheme exposed their major donors' finances. Madoff pleaded guilty to fraud, money laundering, and other charges in March 2009. Madoff's accountant, David G. Freiling, was also charged with securities fraud in March. It was later revealed that he was unaware of the Ponzi scheme, and Freiling ultimately served no prison time after cooperating with prosecutors. Thousands of people and numerous charitable foundations who had invested with Madoff, either directly or indirectly through feeder funds, spent the first months of 2009 calculating their often massive financial losses. Federal investigators in the United States continue to pursue suspects, including some other members of the Madoff family. The estimated losses ranged from $50 billion to $65 billion, but investigators admitted that finding the missing funds might be impossible. In June 2009, federal judge Denny Chin sentenced Madoff to 150 years in prison. Madoff died of natural causes in prison in 2021. One of the most perplexing aspects of the Bernie Madoff case is why he ever committed fraud in the first place. Madoff's legitimate brokerage business was a huge success, and he and his family became extremely wealthy as a result. He had no financial reason to defraud thousands of clients out of billions of dollars. Incredibly, Madoff was able to keep the scheme hidden for so long. Individuals had urged the Securities and Exchange Commission to investigate Madoff's business practices as early as 1992, and the agency had done so numerous times but had failed to detect the massive fraud. Many Wall Street firms distrusted Madoff, and several of them refused to trade with him. Nonetheless, Madoff was able to conceal his massive Ponzi scheme for at least a couple of decades. So there you have it, the crazy genius Bernie Madoff and his Ponzi scheme. If you enjoyed our video, then don't forget to leave it a like and share. Follow our channel for more interesting content.